Hello, everybody. This is Noah and John, and we are from UrbanDigs. And today is Friday, so you're going to get your weekly Manhattan market update. John, supply coming in at 71.98. Show me that chart.
71.98 it is. Noah, that's about 6% higher than last week. It's not necessarily new listings. I think it's more to do with the RLS migration that's happening behind the scenes.
Yes. Yeah, there's some RLS migration going on. We are going to see a little bit of hiccups and bumps here and there as that gets fully done. We saw that article in The Real Deal the other day. Everyone should be aware of it. I think this is partially because of that. So let's consider this noise. We're range bound between the upper sixes and 7,200. Let's see if we break through anywhere in the top or bottom end before we start analyzing that deeper. Thank you for bringing that up, John. Let's go to pending sales, measure of Manhattan demand, 5551. Ooh, I'm sorry, 5541. John, show me that chart.
It is 5541, and it is 1% higher, and that's sort of par for the course as pending sales has been for the last few months, just grinding higher.
Yeah, and every time I think that deal vol is ticking down for seasonality, I wake up the next day and it ticks right back up. So this market is still very, very, very active. We need to see this market pulse go below 0.7 for you to see a notable change in this market, and that's a far way off right now. So let's move to the weeklies. Maybe there's some clues over there. John, I'm looking at 1 week supply came in at 375. Ooh, up a tad. Show me that chart.
Yeah, up a tad, 1.6, and we've been sort of vacillating between up and down the last few weeks. So this week was up.
Yeah, and here's the number that's surprising me. Let's go on 1 week contract signed, 353 deals signed in the last week in Manhattan. That's up 6%. That was ticking down, and now it came right back up. Show me that chart.
I mean, what more do you need to say than 353 deals?
Yeah.
I mean, that would easily be in the top 5 deal weeks pretty much of all time. I mean, it was another stellar week at a time when I don't think many people were expecting another stellar week.
Not in this period of the year. I mean, we're at the end of June.
Exactly.
I mean, we got July and August. We all know that those are seasonally typically some of the slower calendar months, September as well, as you get into Labor Day.
Yeah.
And that's when listings go off market, John. So let's take a quick look. I want to just point this out. Off market is up 23%. Okay. And when I go to a 1 month look, off market is up 34%. Okay, so let's just show, this is what's telling me there is some seasonal components coming on here. Listing volume down 22%, off market up 34%, deal volume down 2% is the 1 month picture. So these are the things I'm looking at just to get a bigger sense of the trend. And when that starts to really change, we will talk about it.
Yeah.
So let's move on, John. We got the quarterly previews coming out today. We got the Q2 reports coming. We're going to keep you guys ahead of the curve. But before we get into the numbers and the prices, John, explain what we're looking at here in terms of quarterly contracts signed and what that means.
Well, we're looking at quarterly contracts signed, Noah, and this is for Manhattan. So we're just looking at, each of these lines is a year and they're segmented by quarter. So the most recent year is 2021. That's that black line in the top left of your screen there.
Yeah.
And just first of all, it's clearly a record in terms of contracts signed, but I also want to point out, look at the slope of that line from first quarter to second quarter. I mean, it was a furious market in the second quarter.
Yeah, and you could see from all the other prior quarters, I know it's a little hard to see because we put a lot of data in here, but you could clearly see that we're well above, and that trajectory, as John was pointing out so elegantly, it's unbelievable. And where we go from here, I mean, the weeklies and the monthlies are not slowing down that much. So this is going to stay at these high levels until further notice. Let's go on to dollar volume. Let's say we look at all those deals and we add up what those last ask dollar volumes are, just to give you an idea of what types of trades are coming through the pipeline. Here's what that chart looks like, John.
Yeah, and this one, I mean, literally is almost off the charts. 2020 dollar volume is by far and away a record, and the slope of this quarter is just unbelievable. I think that's also a record, the intensity of the market last.
Yeah, and we're normalizing from last year's just complete, shutdown, and there's talk of these second waves coming back. There's offices demanding people come back to the office, and there was a first wave, and there's going to be probably a second wave, and an argument's being made is that's what's fueling this surge in the last 90 days or so. We always like to look ahead, right? We always like to look ahead. It's hard to think this is sustainable at this level, but here we are. I mean, this could go on for another quarter or two. It's just
Yeah,
incredible.
you're right. And if you look at, I mean, this goes back to 2004. So if you look at all these other years, I mean, I think there's only 3 or 4 years since 2004 that have been increasing, and 2020 was one of them, going from nothing to something. So, look, in trading, you like to say the trend is your friend. So here, clearly the trend is a decrease from the second quarter into third quarter. But I mean, as we just talked about in the weeklies, like, I don't see it happening just yet. It's really an incredible market.
I don't see. I see this for the next few quarters, so we'll keep an eye on it. Here's new listings. Here's new listings. This is how many new listings and what the trajectory is here. Of course, this orange line right here is last year, showing that huge down and then the huge up. And now you can see where 2020 is. We're kind of on par, if not at the higher end of listings. That's what I see, John.
Yeah, and there's a couple takeaways I have from this, and that's first that orange line from 2020. And if you recall, the feeling of the market, September, October, it just felt like we were being deluged with new listings week after week after week, and contract sign was slow to pick up the pace.
Yeah.
Now, if you look at the number of new listings, I mean, that black line is setting a record for Q2. That is a record number of new listings that came on the market in the second quarter, but it didn't feel like it because so many listings were flying off the shelves, either going off market or just being signed into contract, that it was really almost like a negative effect every week in terms of supply.
Yeah, really interesting. We're just going topic by topic here, guys, quickly to give you a summary. Let's go to price per square foot. I love looking at price per square foot because that's like my linear price action kind of thing. It tells me where I'm back to. And you could see now, when I put a line on here, all right, I'm not going to put a line on here. Actually, I am going to put a line on here. Let me just get that out here. This is 2019, John, right over here. This is 2019, this green line. So that's the mansion tax that happened. And you could see the mansion tax went up and then the mansion tax went right back down to these levels. We all know that was a fake up, right? Of course, because there was a pull forward effect in Q2 2019. So 2019 really is not that high. All right. 2019 is more in these levels right over here when it normalized. So when I say that we're kind of back to 2019 pricing, this is kind of the area that I say that we're at. And you can kind of see exactly where that is. The black line is kind of in line with 2019. Again, at this stage and on, it's in line. Now, when we look at the lines above over here, like where are we not above? That's when you get into the 2016, 2017, 2018, 2015 markets. That's what all of this is. So if you're a seller out there and you think because of the liquidity and the action that the market is back to 2016, 17 levels in terms of price, it's not. And this chart visualizes it for you. You just need a little help interpreting the 2019 bump, which was the Manson tax and not real. That's all. Everything else is legit.
Yeah, and it's an excellent point. One of the reasons, Noah, is if you recall the market run up from 2012 to 2015, it was starved of supply. So here we have a market that's absolutely on fire, but there's constantly new listings being fed into it. Yeah, they're being sucked right out really quickly, but there's not that fierce competition for the scraps left over that was really powering the peak market. So in a sense, this is a very healthy price per square foot trend. It's increasing, but at a decent pace. Sustainable.
Yeah, and I think that pace is going to start picking up as time goes on. We'll see what happens. And finally, this is my final chart, John, and we're going to get right through this. This is linear median sales price trend. This is really showing you, again, that's going to be your mansion tax that was fake right over there, but it's really going to be showing you the COVID breakdown and then the recovery from it and where we are now. And when I go back and I look at where we are now, let me just see if I could draw this a little bit here. We're kind of back at these levels right over here. And of course, that is around 2019 levels. Okay. Late 2018, early 2019, and just another way of looking at it. John, thank you so much for pulling all this Q2 sneak peek data up. It's been incredible. That is John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs. If you guys got questions, we got answers, please visit our forum. Other than that, have a great weekend, and we'll catch you next time.